Thank you very much for the kind introduction, Paul. It is very much appreciated, and I look very excited to be here today presenting the Bellevue gold story. As Paul said, it's a super exciting time for us at Bellevue, where we've just poured this gold bar. That was about 3 weeks ago that we poured that, so we've completed our processing plant now, and we're firmly in the commissioning phase of the project. There's the disclaimers available on the ASX. But look, as I said, it's a fantastic time to be involved in the project, having just poured our first gold bars. Practical completion of the processing plant was about 4 weeks ago. We're now firmly in the commissioning phase, and the next stage of our success is going to be getting into that steady run rate. We're very well set up from a mining perspective. We've been underground mining for almost 3.5 years now, so we've done quite a bit of underground infrastructure. We've set up a lot of independent mining areas, and we're already hitting the run rate required from our development for long-term consistent production. We've also done a lot of grade control drilling, and that's where you would have seen a lot of the excellent geology results that we put out recently, and you'll see in the presentation today. So look, we've created this fantastic platform to be the next major gold producer in Australia, and what we're also seeing is it's a platform for future growth. So we've got the opportunity to optimise underground mining rates, to optimise milling rates, to grow reserves and resources now that we're underground and able to drill it out. So it's a fantastic opportunity for us, and I'd be remiss without mentioning the ESG credentials of Bellevue. So ESG is something that we've focused on from the early doors at Bellevue, and it's gotten us a lot of interest through the development cycle, not just from company stakeholders like local government groups, but also from our employees and our team, and it's really helped us be able to recruit a first-class team to the organisation. So touching on that team here, what you can see is a very experienced board and a management team that was sort of brought online in the past 2 years to really build the operation. So Steve Parsons, who you can see on the left, he's the founding geologist that found Bellevue, and you would have heard him earlier talk about Orteco, his new company. What he did was he handed over Bellevue to mine operators, and on the right-hand side here you can see myself, my COO, my CFO, my Chief Sustainability Officer. We've all come out of Northern Star, so I was there for 11 years, and the other guys were there for a long time as well. So we've seen underground mining deposits, underground gold, and high growth was something that we've had a lot of exposure to, and we're looking to bring to Bellevue. So what have we got at Bellevue? You can see the picture on the right-hand side here. Fantastic processing team holding the first gold bar about 3 weeks ago. It was a huge milestone for us. I mean, that's the effort of hundreds of people. It's hundreds of millions of dollars of investment that goes into that moment of pouring your first gold bar. But it's certainly not the end of it. It's commissioning is sort of ongoing now as we ramp up to that 1 million tonne per annum run rate, and we'll be progressively doing that over this quarter. But pleasingly, we've been able to hit the metrics to drive that run rate from our infrastructure already. So we've hit 125 tonne an hour in the ball mill, and we've hit 250 tonne an hour in the oversized crushing plant, which we oversized for future growth. So that's going well. From a mining perspective, our underground development is already at the long-term required rate. As I said before, we've got all these independent mining areas, and stoping is another thing that's ramping up. I'll do a bit of a deeper dive on that, and I'm looking forward to showing you a bunch of the geology results, because that's really fundamentally why we're here at Bellevue and why it's such a fantastic deposit. We've been really focused on de-risking the mine ramp up, and to de-risk the mine ramp up, you've got to intensely drill these ore bodies. We've been underground with 3 diamond drill rigs. We've drilled at least the next 2 years of production on 20 metre horizontally by 10 metre vertical. It's all diamond drill data. It's all the highest quality of data that you can get, and what it does is really de-risk that mine plan and that ramp up over the first couple of years. And you can see some of the hits on that. All of the different mining areas have width, have thickness, have grade, and have consistency in them. So it's a fantastic platform from the drilling, but I actually quite like this. You can actually see it in the development headings that we're doing now. So As I said, we're achieving our budgeted run rate, which is the run rate that we need to hit the 1 million tonnes. We haven't missed a month since we put our 4th jumbo in June this year. We've got over 40 development headings that we're available to go to, and what we're seeing is really good reconciliation between what we're seeing in our faces and what we're getting from underground. I mean, the grades and the thicknesses there are exactly what we expect, which is what you want to see. The next stage for us is stoping. So, as I said, it's the thing that we're ramping up rapidly at the moment. We have 2 areas of the mine that we've started stoping in to date, which is the Upper Armand and the Bellevue South. We've done over 10 stopes, and we're CMSing, so you can see that contraption on the right-hand side there, where you measure your stopes to see that what you're mining is what you expect to, and the results that we're getting back show that what we drill, what we fire, what we expect is what we're getting. And why this is significant is that stoping provides the majority of the material, the high-grade material that we need to fill our mill. So ramping up stoping successfully is a huge boon for the project. Now that I've got into the sort of status quo and where we are at Bellevue, I'll jump into just a little bit about the area and why we think that what we're just setting up here is a fantastic platform to grow even further. So we're in the Agnew-Wiluna Greenstone Belt, which is in the northern goldfields of Western Australia. It's a north-south trending belt. And what you can see in the region, all of these deposits, Agnew, Darlot, Bronzewing, Wiluna, Jundee, they're well-known gold systems. They're big systems in that circa 5 to 10 million ounce of size. It's attracted the majors there in the past, and what it shows us is that there are the geological settings to have major gold projects there. We've defined 3 million ounces to date, and we think there's a lot more there. As we zoom in a little bit closer, what you can see is, up on the right-hand side here, here's Cosmos. And, Cosmos was discovered in the late 90s, just as the old Bellevue mine closed, and everybody in the region got focused on nickel for a decade. Kerry Harmanis, who I think is at the conference, everyone who's a Bellevue shareholder and has made some money should go and shake his hand because, he took the focus in the area to nickel, and the old Bellevue mines sort of slipped through the cracks of history. This old mine, what they did was that they mined a vertical structure through the middle here, which pulled out about 800,000 ounces at 13 grams per tonne, but then got faulted off, and they couldn't find it and ended up shutting it down. What we've discovered, through many years of exploration, is the extents to that existing mine. So, when you sort of flip that around, what you can see is that original mine sat here in the middle, and we have found hanging wall structures, south and north extensions, a footwall structure, and even some flat dipping linking lodes in the middle of it. So it's just extensive the known mineralisation, but it's the same sort of grades, same sort of tenors that the old timers mined in the 80s and 90s. We've done a lot of drilling to define this ore body. So we've got over 500,000 metres of surface diamond drilling that have really defined it. And what you can see is this is really de-risking for us, having all of this drilling in the mine corridor. But we're really quite well drilled in the mine corridor, which de-risks the mine plan. But outside of that corridor, there has not been a lot of exploration drilling done. And so now that we have this underground platform and we're moving into cash flow, that's the next opportunity for us, is to start hitting some of that underground exploration pretty hard. From the grade control drilling that we've done, we've released these sort of over the last few months while we've got this better data. This is our early mining areas, and what we're seeing is consistently through these areas, we've got high grade, and we're seeing high grade shoots form as we bring in the density of our drilling. You see some of the grades that you're putting through here. You've got 18 metres at 53, next to a 10 metres at 60. These are starting to tie together as these sort of high grade shoots and high grade plunges within the known deposits, and these are the things that will drive real grade and real upside as we mine the ore body. So this is in the Armand main area. Parallel to this, when we did the tighter space drilling, we actually found some perpendicular dipping structures as well. So, this is a previously unknown lode. We've discovered over 200 metres of strike. It's about 30 metres wide, quite flat dipping. This can be accessed from the existing development and, about bonus ounces and tonnes per vertical metre. You go over to Deacon. this is the virgin footwall lode we were looking at before. Deakin has, high grade, high tenor, and we're also seeing some of these high grade plunges actually defined within Deakin as well as we get down, and we've done the first couple of levels of production in that too. And then this is the Bellevue South area. So we've just opened up 2 levels of stoping in Bellevue South. And this block here in orange actually drives a lot of the value over the remainder of this financial year. So that means it's being mined between now and the end of June. And you can see the grades that are going through there that we're looking forward to get in our process plant. This is faulted off on this side. It's faulted down. I'll show you that a bit wider spaced out. So that area you can sort of see just here, that faults down about 120 metres. We've defined it on the other side of that chute for about a 300 metre strike. And if you look even further south beyond that, it's actually open and there's not one drill hole in there because we didn't have a platform to drill it from the surface. Now that we're underground and we're developing further down to the south and we're getting into cash flow, it actually is something that we can rapidly follow up. And you can see one of the development faces there, sort of what sits there. From an exploration perspective, downhole electromagnetics is something that has been used very successfully to discover lodes at Paulsens. It's a high pyrrhotite ore body, so it's quite magnetic. And we have untested downhole EMs, particularly to the south. If I zoom in on that last area that we were in this 3D space, what you can see, the original Bellevue that we were looking at sits there. There's that fault down. We've defined it on the other side, and if you look hundreds of metres of down dip, there's untested downhole EM down there as well that we can go and target from underground. And also, in the footwall, that's the Deakin lode, so that's a big high-grade area. You look on the other side of the fault there, in that offset position, lots of downhole EM, no drill holes in it, so that's something that's going to be great upside for us when we get in a position to be able to drill it out, which is not very far away. Going back into the sort of 2D frame, you can see this southerly plunge of the ore body. Those downhole EM plates sit sort of out here. They're only between surface and 400 metres below surface, so they're quite shallow. So it really does show you that there's room for growth down in that area. And what there also is, we talked about the hanging wall footwall lodes before. You've got your hanging wall lode, your main Bellevue, your footwall Deakin. There's potential for repeat targets at depth, and that repeat target there is one that we tagged from surface with a 1.2 kilometre drill hole. I got about 2 metres at 10 grams. You'll go broke pretty quick as a development or exploration company drilling lots of 1.2 kilometre holes. We're going to have development, down in Deakin pretty shortly, and it'll be circa 300, 400 metre holes down here to drill that out. So that's something that we'll drill in the next financial year. Mining-wise, as I said, we sit really well with lots of independent mining areas. We've got 1, 2, 3, 4, and 5 independent mining areas from the start. So, we're filling a 1 million tonne per annum mill, but all of the mining is just not on top of each other. We have different mining areas that we can go to, and it really de-risks that ramp-up plan. And being able to mine different areas actually lasts for years and years throughout the plan. We've actually got a 10-year mine life fully designed out from the jump, and that's without any of the exploration and any of the growth in it. The infrastructure that we're installing, we've put in a 1 million tonne per annum nameplate, stock standard CIL plant. GR Engineering have built it, and as I said before, we oversized the crushing circuit so that we've inbuilt some capacity for future growth into the system. The operations team have had a look, and we believe we can push it to at least 1.2 million tonne per annum without spending any extra capital on it. And there's a simple upgrade that we can do to get to 1.5 million tonne per annum. So we can look at pulling those triggers when the exploration comes in and when the mining operations get embedded. But at the moment, we're really just focused on the million tonne per annum at 6 grams per tonne, as we've promised to the market. So look, as you can probably tell from my excitement, we're in a fantastic spot as a company. We've got an asset in our portfolio that wouldn't be out of place in the portfolio of a major mining company. We've just set up the platform, moved into production, moved into that area where we can grow, and we're looking forward to the re-rate from a PNAV discount to cash flow multiples as we move into the producer space. Thank you very much.